We'll get started today. We're really happy to have Al Kluis and Cory Bratland from Kluis Commodities here to share some insights on the global soybean market. And thank you for those for coming to attending our session. We know it's a gorgeous day outside in all of Western Canada and probably in the States as well. So we might not have as big of audience today, but that's okay. We'll be recording this session so that people can probably YouTube it later, or they're when they're driving in their tractor and listening to it, or at home in the evening they can share it as well. So just a quick reminder: this is our fourth session, fourth and final session. So most of you are probably familiar with the drill. But if you do have questions throughout the presentation, a couple of ways to answer it. Or to text it in is you can text it to 204-403-8444, and I can get it on my phone here and make sure we get it off to Al and Cory. Or you can go on to the chat page. I know some people have that option, and they can just type it into the message, and we will get that chat as well and make sure that we can get it answered. For the most part, I've put most of the phone lines on mute just to minimize the background noise that's coming in. So you might have to unmute your button if you do want to talk, or if you're on the line, *6. But I think in the last sessions, it's been working good with texting and chatting those questions in. Quick reminder, we are going to be recording this webinar for the purpose of sharing with others who weren't able to attend, and for good reason today with the fields drying up and the weather awesome. That's what we want to have. So we will be recording this session for future people to listen to it. And without further ado, I'll maybe pass it all over to Al Kluis and Cory Bratland. We've been working with them for a number of years, and many of you may get their morning comments or their weekly updates on the grain markets. Pretty concise every morning. I don't know how Al gets up at 5 every morning to type in those ones. He's better at that than me, obviously. So hopefully they'll be able to share some of their experiences, because it's been some volatile times here in the last month or two. So I'll maybe pass it on over to Al and Cory.
Okay, Tyler, thank you. I think we've worked together for more than 10 years and really enjoy working with Tyler, Travis, the whole team there, and look forward to another decade of working together. It's fun for me just to see the growth in the company, the growth in NorthStar Genetics. You guys have done a great job running your business, and I'm very proud to be working with you and happy that we're able to put these programs together. So I'm going to do the first part of the program. I'm working from my home. As when Minnesota, we're in a lockdown, at least for another till May 4th, and then possibly after that. And it really doesn't matter, as long as you give me a good internet hookup, I can work from about anywhere. So if you want to just advance to the next slide, we'll quickly go through the disclaimer. Tyler, if you can advance on. Tyler, if you can push the slide ahead. Okay, really not necessary, but we have to deal with compliance people. Cory and I are both Series 3 commodity brokers, registered, and we need to do a standard risk disclosure statement. The first and last statement, I think, sentences give me the thrust of what I need to say. That an investment in futures contract is speculative, involves a high degree of risk, and suitable only for persons who can assume the risk of loss in excess of their margin deposits. Direct your attention to the last sentence. On the last paragraph, opinions expressed herein are the opinion of the author only and not the opinion of any firm the author may be affiliated or associated with. Okay, Tyler, go. One more. It's interesting to work through this now. It says that I've been trading since 1975. I've been a grain trader for over 40 years. So I'm going to use some of my experience to talk about what I've learned through some of the crises that we've lived through. Some of these crises have been self-induced. This is a little different because of the war with the virus. But the timing is what I find very interesting. When I spent a lot of time researching previous crises, how far the markets went down, and more importantly, how long it was till they turned around and went back up. Go ahead, Tyler. I've worked with Cory for the last 12 years, and before that, he worked in Southwest Minnesota buying grain, and he's Chief Commodity Advisor with Kluis Commodity Advisors. His office is about 4 hours straight west of me. We might be separated by 200 miles, but I would say we talk at least 5 to 10 times per day, each day on the markets, and interact very closely. Go ahead. So the coronavirus, I can't just do a standard risk disclaimer. I'm going to talk about what's happened in the global stock, commodity markets, use my 40 years in the business to talk about the historic perspective, a little bit about what to explain short-term and long-term. I'll switch it over to Cory, who will then be able to do the next thing. Global stock and commodity markets, they're all interrelated. If you get our AM updates, you see we talk about the US dollar, we talk about the quite often crude oil prices, energy prices, they're all interlocked right now. And it seems like a lot of times in our markets, we've got risk on and risk off data. So I'm going to look through a few tables that just show how things have changed since everything started coming down. Go ahead, Tyler. So really it was late February, right as we were heading down to a major meeting in Texas, that things started to really turn south. The stock market has had, to me, an unbelievable rebound. We were down just over 30%. As I'm writing this today now, we're down a little bit more than that. On the Dow, at this time, we're down about 200 points. It's been extremely volatile, but the market down 16%. Energies, wow. Crude oil down 71%. I think it was a week ago yesterday when the May crude oil contract went off and it went negative. I wrote about that. I did not ever think that you would see a commodity go below zero. But for a brief period of time, due to a number of circumstances, crude oil plunged to minus 40 degrees. The June crude, the most active contract, went down to 650. And yesterday you had a really nice rally. And today we're up another $2.50. So we're back up to $17, but we're down a long, long ways from where we were. And we're driving only about 52% of what we were doing a year ago. We were consuming about 10.5 million gallons of gas, million barrels of gasoline a day in the US. Now it's just over 5. Gasoline prices are down 57%. Ethanol prices are down by 32%. And what's unusual is that ethanol only has 80% of the energy of a gallon of gasoline. So normally it's trading at about a 20-cent per gallon discount. And at this time, ethanol is still overpriced because we're trading at a premium to gasoline. So you're getting very minimal blending. If we're only driving about 52% of what we were doing a year ago, only consuming 52% of the gasoline we were doing a year ago, we're just not going to be able to blend as much ethanol. As a result, ethanol plants have been shutting down. Over half of them are now idled. We're producing about half the amount of ethanol we were a year ago at this time, and therefore we're consuming a lot less corn. And that's why we've seen this tremendous drop in corn prices down to some of the lowest prices since 2016. Next slide. So the grain markets, again, we've had a little bit of a rebound. As we're talking today, nearby corn is 310. We dropped about 20%. Soybeans were down about 8%. We've got a great rally today going because we're working with Tyler just for NorthStar. We're up 16 cents, so we'll be doing this again, Tyler, in the near future. Wheat has actually not been hit that bad. We're down 7 or 8%. So the energy markets, and then if you look at the individual grain markets, corn has been hit the hardest. Go ahead. Our livestock markets have also been challenged. We're seeing a lot of plants close. You can't keep the workers healthy. Cattle were $1.10, and they dropped to 84.80, and that was down to just about 80 cents a while ago. This has been pretty devastating because we can't keep the packing plants open. Livestock's backing up. Feeder cattle from 140 to 119. People can keep the cattle out in the range a little longer, find some hay, keep them alive. Hogs have had a huge rally back up, but they're still down about 17%. In both the cattle and the hogs, we're backing the animals up. We are euthanizing baby pigs and even live hogs. one of the plants where my family farms, Southwest Minnesota, has been killing about 20,000 hogs a day, is now euthanizing about 13,000 hogs per day. And so that's really put the livestock markets into a lot of turmoil. Go ahead, Tyler. Historic perspective. I'm going to look back, and this is not an exact correlation, but let's look at some of the other ones. So advance. The three that I've lived through have been a big impact on grain prices was the Jimmy Carter grain embargo. Ironically, we were upset with the Russians because they were in Afghanistan, where we've now been for over a decade, the U.S. and their foreign policy experts. And so we put an embargo on grain going to Russia in 1980, and the prices crashed lower and eventually rebounded. We had a big fallout in both stock and commodity prices when we had the terrorist attack, September 11, 2001. We actually closed the grain markets and stock markets for a couple of days. And then we had, during the financial crisis 2008, we had a major collapse in the stock and commodity markets. Let's look at how this affected both corn and soybeans and what the timing was. Go ahead. So the red arrow, it's kind of small, I should have made that bigger, was in January when the Carter announced the grain embargo. And you can see the dot the next day, limit down, opened sharply lower, came back to almost where you were, plunged lower into the month of March, and then a weather problem developed that summer, and eventually we had a huge rally back in the corn market, back up to over $3. Now that was in 1980, and it's ironic to think that today, 2020, we're also trading corn at $3.05 a bushel. But look at the timing. That's what's important to look at. So advance the slide, please. The soybeans, again, you did not get hit as hard. You can see the red arrow. We open limit down when its trading resumed 2 days later. Open lower, came lower, actually rallied higher than you were. And then the market continued its downtrend into April. You went sideways. Hot, dry weather pattern developed, and you went up in 1980, went up to beans just over $8 a bushel, which 40 years later is about where we are today. Go ahead. So that was the Carter grain embargo. Then you look at the September 11 terrorist attack. Corn was in a downtrend, trading about 238. You plunged lower, came back close to where you'd been trading, continued down for another 6 months, putting major lows in again in April. By May, the market turned, the trend changed. Again, weather problems in July gave us a rally back to where we were before the whole collapse came. Soybeans, let's look at what happened with the next slide. There we had a pretty minimal break. We went from where that red arrow was, September 11, 2001, collapsed lower, went sideways, hit the ultimate low January of 2002. But again, weather problems in the months of June and July took us back up to levels that were much better than they were at when the September 11 terrorist attack came in. So weather eventually turned the prices around in both the Carter grain embargo and after the September 11 attacks. Now let's look at the financial crisis. This was driven more by greed than war. And you can see where we started to turn lower. We went lower all the way into that time period. So I think that's a random slide. Let's go on to the next slide. This shows when Lehman Brothers, a big Wall Street firm, filed bankruptcy back in September 2008. The markets froze, stocks collapsed. You went down to the major low in the stock and commodity markets, December of 2008. You started a rebound, and it was a slow rebound, and you didn't ever get back to where you were. We've never been back to, it took a long time, took till 2011 before we went back to $6 corn. Next slide. Financial crisis hit the bean market. We went lower, attempted a rally back, put the ultimate low in, harvest low, fall of 2008. Actually, it was December low in corn, soybeans, and the stock market. And weather problems by May, June of next year took those prices higher. So the point of showing you all this is the timing. Most of the time you have a 1 month plunge lower, you rally back up, you put the ultimate low in the grain markets 3 to 6 months later, and within the majority of the time, not every time, you're back up to levels that were higher than you were within the next 12 to 18 months. So I'm not saying they're going to see an instant rally here in May, June of 2020. I do think there's a good chance as we look out towards 2021 that we can see prices come back up to some higher levels. But unless we have some weather that's really bad late summer, we have to really put together a realistic price plan on getting our crops turned into inventory, turned into cash, because I don't think this is going to be a real quick turnaround to the current virus problem that we're experiencing in the US, Canada, and around the world. Go ahead. Grain market outlook. And here, till pretty much through the last couple of slides, I'll turn it over to Cory. So Cory can, Tyler, you keep driving, but Cory, if you can give the commentary. Go ahead. Okay. Cory's either muted himself or Tyler's muted him.
Yeah, Cory, if you just want to click your little microphone there.
There we are. Perfect. I'm here now. Okay, go ahead and go to one more slide there, Tyler. So, everybody hear me? Okay, excellent. So,
Yep, you're loud and clear.
Great. So this is, we always like to look back at, look at things kind of at a long-term standpoint. And this is the monthly corn continuation chart. And one thing I like to point out of it is look at the range that we in general trade in, okay? Going back to even 2014, it seems like we find support around that 330 level, but we don't spend a lot of time much above $4. So something we want to look at, and when Al and I give our recommendations, boy, anytime we get the front month above corn above $4, I mean, yeah, we are definitely interested in selling. Sure, you look back to 2010 to 2012, we had the big run up there with the major drought that we had here in the U.S. Shot corn to, 850, and then, we come sharply back down. But overall, we're settling in this range right now. We do have support down here at $3, 301, and that was tested again here yesterday. We hit $3 for a low. Since then, putting in that low, we've had some good exports here this morning that have rebounded this market, and we're actually up 4 to 5 cents here as I currently speak. So go ahead, next slide. We'll look at the, I think it's the daily chart, Tyler. Next slide. Yep, the daily corn chart. So when I look back, I always like to look at the monthly chart, and then I hone it in. I didn't include the weekly, but I thought I'd come in here to the daily chart. And this is the daily continuation chart. Always the front month, not the new crop, but always the front month. So a couple things I like to point out is, yeah, I mean, if I've got some corn that I'm looking to sell, like we still do, sure, we are looking for a little bit of a rally. We think we've priced in a lot of this negativity. The crop is off to a great start, getting planted under relatively ideal conditions. But we're finding good support here down right around $3, 301. But for the near term here, we think we could trade in this sideways channel from about $3 to maybe 320, 323 up in here. So if we've got some corn to sell, sure, I think as an individual, we're going to want to get some little bit of corn sold there on the rallies upwards of that 320 level. So go ahead, next slide, Tyler. So when I look at beans, there's something very similar. We sure like to trade in this range from about $8 to about maybe $10. Okay, so a little bit broader range. But in general here, 950 seems to be kind of causing us a lot of resistance here. We did have a very nice crop down in South America, which we'll have some slides on here coming up. But in the U.S., obviously, we were way down. We had a good crop. We just had a lot less acres here this past year. But with everything, with the currency valuations that the U.S. has been having, we're not very competitive, or haven't been very competitive here going forward. So, we're finding some support here down the low $8, $8.25, $8.30 seems to be kind of finding us, but boy, rallies up to $9 are going to be limited. You start getting up to above $9, they're going to need to be sold. So if we look at the next slide on the daily soybean continuation chart, sure, there you can see, we got, going back there since about the middle of March, you have there about $9, and then we've got broke down to, we got resistance there around 870, and now recently here down about 850. So these are some targets that we're initially going to be looking at, 850. If I've got a lot of soybeans I need to get sold, that's where I'm going to probably get a rally back up towards, 846, 848, somewhere in there. I might sell a few. Okay, we get a bump back up close to 870, you can sell some more. You can go ahead right to the next slide. So what can happen in 2020? Go ahead. A lot of things. First and foremost, we're hearing talks again that yes, China's going to come in here and talking about honoring the phase one of the trade agreement. We've there's been a lot of skepticism about China here as of late, especially with this whole coronavirus and stuff. So they've been a little reluctant in buying stuff. They've been buying a lot of beans out of South America. And I think it's just a function of their demand is still not up to what they have been, just because of that coronavirus. They're still, they're slowly coming out of this and building back up, but it's going to take some time, just like it will take here in the U.S. and also up in Canada. So, will China honor the phase one? I can say this morning, the weekly export sales on pork were very, very large and directly at China. So they are in here buying a lot of pork from the U.S. Okay. Second thing, and it's kind of down on the downhill slide of it, the weather and the crop size in South America. Okay, they're kind of in the late stages of their harvest. The overall crop was pretty darn good. Now we're going to look at the U.S. corn soybean acreage mix. We saw here about a month ago big acres in corn coming at the U.S. and that's to be expected with where our crop insurance averages are to where the kind of the revenue guaranteed and so on. And then also what the weather and the crop size in 2020. So go ahead, next slide. So Brazil, bottom line, they had a very large corn and soybean crop. They will produce close to 1 billion bushels more soybeans than the U.S. Yes, it's hard to fathom that, but consider that we were down considerably last year with 75, 76 million acres of soybeans is all acres planted. Boy, it doesn't take too long. We had a decent yield, definitely off, but overall still a pretty good crop. Total South American production is higher than last year, and it continues. And we've seen the last 3 years where both Brazil, Argentina, and then if you add in Uruguay, Paraguay, the other small countries down there, it's getting, they have a tendency to be producing larger and larger crops. They're getting better genetics. They're getting better agronomic practices and such down there. So go ahead, next slide. So this is a little bit of what the 2020 global U.S. and South American corn production kind of looks like. So you can see here the U.S. Yeah, with our down yield, 168 yield, we still had around 89.9 million acres of corn, 89.7 million acres of corn planted, and we produced just under 14 billion bushels of corn. Okay, put that in perspective. The United States, we are still the largest game in town in the world. Okay, we look at Brazil, we look at Argentina. How do they compare? Sure, they grow a decent amount of corn, but when we put those into correlation of what Iowa, Illinois, or Minnesota, some of our largest producing states, Iowa is our largest producing state. I mean, Iowa alone is produced in 2.2, 2.3 billion bushels of corn. That's more than Argentina as a whole. Brazil is only producing 4 billion bushels. I mean, you take Iowa and Illinois, or Iowa and Minnesota together, they produce more corn. Those 3 states alone will produce more corn than Brazil and Argentina put together. So, the U.S., so when we see the U.S., or I take that back, when we look at corn production in the world, we have to look at predominantly the United States, okay? And this is the big reason why. As we move into soybeans, it definitely shifts. You can see here, obviously with a lot less acres last year, Brazil will probably pretty consistently producing as much or really close, if not more beans alone than the U.S. Okay, and it all depends on how many acres that we will shift. But then when you add in Argentina into the mix, boy, them two alone, they are the largest producing region in the world. So you've got 2 big countries that are producing a lot of soybeans. Okay, so I guess the tables have definitely turned to where it used to be South America would produce almost as much, but now they produce more beans, and now we've got Brazil is producing more soybeans than the U.S. alone. So Iowa, Illinois, Minnesota, just kind of put it in perspective, around a 500 million bushels each. So next slide. When we look at the last 3 years, this is kind of tells the total, tells the tape here with, 18, 19, and 20, how much corn, and even the next slide, how many soybeans. I mean, these trends are generally moving up. Sure, that light blue one, the total here on the far left, that it says, look at that. That's Argentina, Brazil. That's total South America to put together. We add in Uruguay, Paraguay, and some of the other countries down there. But overall, I mean, look at that trend. I mean, we are going from a little over 6 billion bushels to, 7.2, 7.3. So, I mean, they've gained a full billion bushels of production in South America alone in soybeans. So that's something that's going to continue to happen, as they get more and more technology down in Brazil. Go ahead, next slide. So as we look here in the U.S., the fundamentals here, we look at the last couple 3 years. The big thing what I look at is obviously is I like to look at that carryout number, and maybe not so much carryout, but what is my stocks to use ratio? How many bushels do I have left over compared to the average number that we do use? Okay, so you can see there the total usage. We went from 14.8 billion bushels in 2017. That was one of our largest usage years ever, and it might be ever, to down to 14.3, down to 13.8. So I mean, our usage is going down, and some of that has been a lot of it has been exports. Exports in 2017 out of the U.S. for upwards around 2.4 billion bushels. Last year, or excuse me, this year, 2019, I think we're projecting around 1.775, 1.8 billion bushels. So you start taking another 600 million bushels and add to that, and that's a big chunk of it. Okay. So yeah, I mean, just carry out of 2+ billion bushels is still kind of seems to be our burdensome number, but look at that stock to use ratio overall. So trend line yield, 176 the last couple of years. Last year was 168. So where will we be at this year? You can go ahead, next slide. Looking at 2020, yeah, we just looked at some neutral, a bull and a bear and a neutral, situation. So when I look at a bullish situation, the March acres report that we had here a month ago, we're looking at close to 97 million acres projected planted. That's a lot. Okay, that's rivals right up there with 2012. It's the second highest corn planted number, in history of the U.S. Okay, now, are we going to get those acres planted? That's still to be determined. So, but where do we got to get to see some possibly bullish numbers? We think, corn acres planted have got to drop, almost 4 million bushels or 4 million acres down to 93. Okay, add in that. I got to probably see a trend line yield of like what we saw last year, 168. Okay, and what I can tell you right now, and Al will agree, is we've got over, probably as of Sunday night we were 27 or 28% planted in the U.S. under probably ideal conditions, relatively early, really early. And I would say by this Sunday we'll probably be 50-60% planted, in essence by May 1. So I mean we're off to a phenomenal start. So we got a little over 2 billion carry in. If we look at, I'm being pretty optimistic on here. I think today of usage at 14.7. We've got some issues to talk about with ethanol as a whole. We've heard upwards of 20% reduction in ethanol, corn consumed for ethanol. What does that mean to everybody? That's about 1 billion bushels of less demand. Okay, and where are we going to pick up that 1 billion bushels of demand? Sure, exports are probably going to pick up because we're cheap. We're the only game in town. As the world economy start to get back up and running, we can gain some ground there. We will also gain some bushels go towards feed, but the combination of two, we cannot pick up the full 1 billion bushel demand. So for us to have a real friendly numbers, I think you got to get this stocks to use ratio, which is projected at 11.8% in my bullish scenario there. You got to keep that around, 10, 11, 12% to have a shot to get maybe corn upwards of that $4 futures. Okay. Now, if we look at a neutral, kind of our bias here going forward, 94.5, 95 million acres, give or take a little bit. Trend line yield, yeah, I think trend line yield could be 176, maybe even possibly better. We'll see. But boy, that stocks to use ratio swells to 18.1%. And again, I'm using a fairly aggressive number, I feel, today at a 14.7 billion bushel demand. Okay, I've ramped up exports to about 2.3, 2.4 billion bushels. So that's right up with the best number we've seen over the last 4 or 5 years. And I even have cut the ethanol some, not as much as what they have expected, but and the reason why I haven't cut ethanol as much is we're starting to see people get out and about and driving more. Okay, we may not all go to Minneapolis to go watch the Minnesota Twins play in a crowded stadium, but I think people are going to be out and about consuming more gasoline this year once we get the green light to go out and about and do their social distancing and seeing more of the countryside and just getting out. So I think tourism, travel, stuff like that could be on the rebound. Now, berry situation, we could plant 96 million acres of corn. Okay, I think from the 97 million acres that we talked at the end of March, I think it will come down some. I think the big reason is the Dakotas, northern Minnesota, we're not going to plant as much corn. Okay, so the rest of the U.S. probably is going to plant all the corn that they had advertised. So what if we get a 180 type trend line yield? And I got usage I took down just a touch. We can see here it doesn't take too much, and all of a sudden this stocks to use ratio swells to 23%. Okay, those are unheard of numbers. Okay, 3+ billion bushels of carryout. These are some huge stocks to use ratios that we've had back in the 1980s. Okay, so these are just kind of some numbers that we play with. You can go ahead to the next slide that we like to look at on a day-to-day basis. So if we look like trend line type yield, yeah, I mean, you can see our trend line's been up from the bottom left to the upper right. The trend line yield is going to come in here, probably that 174 kind of projected. The USDA number, the USDA in the May report will come out May 10th, 12th, right in there. Will give us a new updated trend line yield. We think it'll be that 174, 176 type area. So next slide. So as we look towards soybeans, sure. You can see last year we planted only 76.1 million acres of beans. Okay, that's one of the lowest numbers in several years. And we had this huge carry-in, 909 million bushels. We are talking a year ago, probably, possibly looking at a billion bushel carryout. Okay, again, that's a number we never thought we'd hear for a long time. But we had a little bit lower yield. We had a little bit tough August there, and didn't get the rain and the weather to participate. So all in all, the usage for soybeans has been pretty darn good. We like to consume around this 4 billion bushel mark, and overall you can see that carryout goes from 438 to 909 to projected here currently at 480 million bushels. So again, stock to use ratio hanging around this 10-12%. That seems to be kind of the norm. You can see 18, it swelled to 22%, and beans got under $8 and got kind of cheap on it for a short term. So go ahead, next slide. Let's look at what could happen here. So yeah, we were projected to plant like 83.5 million acres of beans this year. I think that number is going to come up. Okay, the Dakotas, Minnesota, we're going to plant northern Minnesota, I should say, we're going to plant a few more bean acres. So a bullish scenario, sure, we can plant a few more bean acres at 84 million. Trend line yield of 48.5 could be a situation. Again, better yield than last year. Trend line is probably more in that 50 range, but what if you have a little bit less trend line yield? Okay. Usage, 4.2, 4.3 billion bushels usage. We're producing only 4 billion bushels. So it gets our carryout down to 197, 4.5% stocks to use ratio. That number there, I think if we get that, we'll probably see corn or bean futures get back up to upper $9, maybe even over $10. Okay, a futures. Now a neutral position is keeping the scenario the same. Carry out from 480 down to 440, 11% stocks to use ratio. Those are the numbers it'll take. What if we plant 86 and we have a 50 bushel yield? It's pretty realistic that this could happen. We are planting a lot of soybeans right now. Usage up a little bit, which is to be expected. We are exporting a lot of beans, soybean meal. So all in all, 10.2%. Berries, boy, I mean, we're going to have to plant upwards of 88 million acres of beans and get a 52 bushel yield. And again, that carryout swells to 16.6%. Not the 22, 23% like corn, but it's enough to knock this market back down, and that's some of what we're pricing in today. So go ahead, next slide. So outlook, the crop is getting planted fast and furious, okay, under really good conditions in general. Total acreage is likely going to be higher. Yes, we're not going to have near as much prevent plant like we did last year. We're getting a lot of it planted. We're kind of in somewhat of a dry cycle here right now for much of the Midwest. The market is right now pricing in that worst case scenario. We're pricing in, this major demand destruction, okay? Plus, they are also looking at this potential big crop, okay? If we do not have any major growing concerns throughout the course of the year, sure, prices will probably likely head lower. I think for the near term, yesterday it seemed that we kind of turned the corner, I feel, maybe for the near term. Like I talked to an individual this morning, I just said, hey, if we don't have any major weather problems, 30 days from now, we could probably be 10 to 15, maybe or so cents cheaper, okay? You go another 30 days after that, you could be another 10, 15 cents cheaper. We'll take the premium out of the market if there is no concern with the crop size. Go ahead, next slide. So weather outlook, currently outlook is ideal, okay? We are looking at potential, a lot of forecasters out there looking for developing the northern and western plains to be very hot and very dry. Okay, go ahead, next slide. Much like possibly 2012. So if we look at this, if a La Nina happens the second half of the summer, starting in July and August, corn yield from neutral, you can see there the browns are basically taking off, 5 to 10 to 15 bushel an acre decline is what you could possibly see. So you can see here, where is this at? This is Minnesota, East Central Iowa, Northwest Illinois, Southern Wisconsin, a good chunk of Iowa, and a good chunk of Minnesota. Okay, so if this happens, this is kind of predicted where it's going to happen. So, so you can see here, if La Nina there in July, if it steps up, and that's kind of when they're projecting it's going to start. Okay, the big question is going to be is when does it start, if it does start, and where are we at on our growing heat units, and where is pollination period happening? So go ahead, next slide. So you can see that it can happen. So if if the AO, the Arctic oscillation stays positive and strongly positive in the second half of the summer, we could even get a drier yet. Okay, and you can see there that's a good chunk of all of Iowa, a good chunk of Illinois. Again, remember my charts way back. Iowa, Illinois are the two biggest producing corn states in the U.S. Okay, followed by Minnesota and then Nebraska. So you can see even eastern Nebraska there is kind of getting a pretty dry. So you can see that this potentially could have a negative or have a very positive outlook on the prices. But again, we have to get the La Nina to set up, and when does it set up? If it happens to set up earlier, the better chance it's going to be more effective on curtailing the crop size. Next slide. So current acreage outlook for this year. Go ahead, next slide. So how many total acres? You can see here, this is the 12 major crops, so all crops planted, the principal crops. You can see here, 313, 309, 319, and so on. Last year we were down to 309. We had a lot of prevent plant put in here. We think, with the good weather, everything, we're going to be back upwards of total acres around 314 million acres. Okay, so we've planted more than this in the past, but again, it's going to be an uptick from last year. Next slide. So how many acres of each? Yeah, so this is the estimate. So currently, corn, beans, wheat, that represents about 225 million acres. Okay. So how is that compared to the last couple of years? Last year, those three crops, we had about 15 million acres of PP prevent plant, but still down. So we might have a little bit higher than normal prevent plant. And a lot of that is because a lot of these potholes that have got water in, they're bigger than what they were 2 years ago. So we're not going to get those planted, but we're on a path to possibly get those planted again next year. So we could see this whole pie in the 2021 year when we talk next year, that this whole thing could come up even a little bit higher. So next slide. So go ahead, one more. One thing Al and I like to do is look at cycles. Okay, this is a 68 monthly corn cycle. And you can see each red line we put in a major low. So there's about 68 months in between each line. What we like to look at then is after we put those lows in, when do we see the high? So typically when we put those lows in about 20 to 30 months afterwards, we'll put in another high. We put in a kind of a initial primary high, then we put in a secondary high before we put in that next major low. But each low that we are looking at now, we were looking at possibly of being February of 2020 as a major low. So we put in some lower levels here in April, but so I mean that can be, we can be off. Could be 66, could be 70 months, sure. That's ideally. So we're kind of thinking here this spring time frame in our 68-month cycle, low to low, is we're kind of looking at some significant lows coming in, and it does line up that way. So are we carving out a bottom in here? That definitely, it sure looks and feels like it. But you can see here when we put those lows in, we like to trend sideways for a bit before we head higher. So next slide, we'll talk about the weekly. About every 45 weeks, we like to put in some cycle lows. And and then once we put those cycle lows in, it takes about 20 to 30 weeks thereafter. We'll kind of put a major high in. Okay, so again, they were kind of looking at here this spring of this year. So from May of 2019, we're looking at February of 2020 to be putting in a significant low. So we're really closer. We might have been just off just a touch, but we are looking at some lows to be coming in here, ideally this time frame. So we'll know after the fact if these are correct, but that's why we're not too terribly bearish down here. We think we've priced in a lot of this negativity. So go ahead, next slide. When we look at soybeans, it's a little different. 39-month cycle low to low. Okay, so when we put these cycle lows in, we can see when we had one here at a little over about a year ago, and then so when we're looking at that, we're looking at about 25 or so, 30 months later, we're looking at a high. So with that, we're looking at a low to come in here possibly later on. Well, it'll be about a year from now is when we're kind of looking at a possibly another kind of significant low to come in. Okay, so go ahead, next slide. When we look at the weekly cycle lows, we like to put in the major lows about every 45 weeks. About 30 to 40 weeks, would come in for a high, and that cycle low would come in here. We had projected here about May of 2020. So with these prices being down where they were, sure, it's hard for us to get too bearish in here, considering our cycles, our timing cycles look for these lows to come in. Plus, look at all the negative news that we've thrown in at this market. Good planning, demand destruction, coronavirus, with the world economies being basically in lockdown. I don't know what else we can throw at this market, but overall, I mean, I guess the markets have been down under some major pressure, but they don't feel, they feel a little better than what maybe they possibly could have been. So next slide. So as we look at wheat charts here going forward, yeah, again, we just haven't moved a lot. Weekly continuation wheat chart, as we gravitate up towards 550 area is a good area to strongly be considering to sell here. So wheat market has turned positive on us about close to $5 futures here today. So I think you're going to stay in this range. So it's a good indication if you're looking at selling some wheat. Look at be selling some upwards of that 540 or so Minneapolis wheat futures on the front month. Next slide. We look at the daily wheat chart. 513 is going to be the kind of hurdle to get above, and then ultimately that 540. So I think we've been staying in that pattern. 490s to 550 kind of seems to be the range. We do have some issues in the U.S. with our winter wheat crop down in the southern wheat plains, Kansas, Oklahoma, Texas Panhandle. They've gotten some cold weather. They've gotten some snow down there even when we haven't. So it's kind of unusual. They were actually colder than us and gotten some snow later in the year than what we even have here in South Dakota. So there's been some damage done. We don't know the extent of it. Also, exports have been very strong here. Go ahead, next slide. think it's, yeah, canola. Yeah, well, I think you guys are probably on pace to be growing a lot of canola this year. Been a pretty good crop the last few years anyway. So you can see here, you start getting up around this, $470, $480 a ton. Canola is going to be a good level to be considering to be selling here in the near term here. So go ahead, next slide. And the daily canola, yeah, so 460, we seem to be in about this 450 to 465, 470 level. Again, if we're needed to move some, those are some targets to look at, consider selling here in the near term, especially as once we get the planning underway and get things off to start. I'll be checking in with a few of my customers up in Canada to see kind of how the canola is going in. We are seeing some smaller grains that will go into North Dakota, South Dakota, Montana, and so on this year as well. So next slide. Okay, some strategies for selling your crops. Go ahead. Next slide. Currently, we as a firm, we are 60% sold. Okay. We did a lot of that was sold before going into harvest. We sold a little bit since harvest. Right now, so we're looking to the calendar is a little bit against us. We're looking to sell 20% if July futures get up to 358. July is about 320. So we're a little bit off that level, but we feel that we've priced in a lot of negativity. But if we can get some of this ethanol usage back up again, this will definitely help. And I think, you got the funds, you got a big short position in corn. And, we haven't priced in any weather premium yet. So it's very early in the year. We've taken a lot of weather premium out. So a lot of times that's kind of dangerous. So I think, we get a rally back up to 358. We as a firm, we're going to move up to 80% sold on our old crop corn. Next slide. New crop corn, we're 20% sold. We're very happy to have that stuff sold. We're not in panic mode yet, but, we are going to look at selling 20% of our production up December corn at 388. A lot of that is because, we usually like to sell north of $4. We're currently trading December corn about 340. So we're looking for that 30-40 cent pop in this market. Typically, we have a tendency to get back to crop insurance averages, which is 388 each year. So if we get this sold with the carry in the market that is potentially going to develop, these will be some really nice sales for folks. So go ahead and next slide. Look at old crop beans. We are currently 40% sold. If we get July beans up to 897, which is currently trading about 851, we're going to sell another 20% to get up to 60%. So beans have a tendency to creep up to that $9 level. So we get up just shy of it. Don't settle for that round number. Look at it like an 897, 898 level to be selling. Next slide. New crop, we have nothing sold. We get November beans. We're going to sell a little bit at 928. It might be a little bit under break even for folks, but with South America having a good crop, they've got a huge currency advantage over the U.S. We have a hard time competing with those, with the Brazilian real where it's at, and Argentina peso, and then where the U.S. dollar is. Everybody likes to come to the U.S. dollar as kind of a safe haven, and that's kind of been getting us pretty negative to the world front. So next slide. As we look at seasonal averages, sure, we're coming into that time frame, May. This is typically a good time to be getting some stuff planted. Again, we have priced in a lot of negativity. Okay, use a rally. If we can get this 25, 30, maybe 40 cent rally, take advantage of it. Okay, maybe consider buying some puts. But this May time frame, year in and year out. Okay, 8 out of 10, 9 out of 10 years, if you sell some grain in May, new crop grain, it'll be a great price. So look at where the average of October is. Okay, October, November, considerably less. On average, 40, 50, 60 cents less. Could we make up that situation again, scenario again? Yes, we could. I think, to me, December corn, is still, if we grow a big crop, 15 plus billion bushel corn crop, we've got probably 20, 30 cents too much into the, built into the price. So go ahead, next slide. So final review here. The phase one agreement is signed. Now we have the uncertainty of the coronavirus to deal with. Okay. The other thing with the phase one agreement is will they and when will they honor it? Okay. It's very wet in large areas of the Corn Belt, especially the eastern Corn Belt. The weather is scare. We haven't had much, probably aren't gonna see much happen here right now. It is an election year down in the U.S. Okay. Odds are favor that we have some sort of rally in the U.S. At some point. Obviously, doesn't look like we're going to get much of a spring rally. So eyes are going to look at our eyes are going to turn to the summer rally. So can that happen? We're talking about La Nina. Don't get so hung up on waiting for that. But if the market does start to move higher, get some hedges in places, maybe buy some puts, and be ahead of this potential rally. Okay, go ahead, next slide. Al, you want to take over? You want me to keep on?
No, I'll keep going here. I know we're getting close to 1 hour, so
Yep.
I think we've got very conservative, consistent results. That's why we've been working with NorthStar for 10 years. That look at our track record. We don't tend to jump in and out a lot. We've got very consistent results. We're scale-up sellers. We have a plan. It's very disciplined. If you want to go to the next slide. Our products, you have a couple of choices. We have brokerage services, which we can't do in Canada at this time. We have marketing services. We have our market pack and private client. We also very unique in the industry that we've got a grain trading academy. Advance. So on our market pack, and this is basically what you get when you're buying, you working with NorthStar. We do an update 3 times a day. I'm up early, Travis, and normally 2 or 3 days a week I do the update. I've got Bobby and Mark helping me so that by 6 a.m. it's always there. Very comprehensive Saturday report. People seem to really like using our app. We do action alerts, so when it's time to sell, you get a ding. Subscriber-only webinars, website access, and it's $880 a year. Hopefully you want to work with NorthStar Genetics, and they will cover the cost of this subscription. So of the seed companies we work with, this is pretty amazing. It's a good value. It's kind of a win-win for both of us. Go ahead, Tyler. We also, Cory especially, work with you one-on-one on your farm marketing. Just Cory's number will be up there. Give him a call directly. We have to get a marketing profile, find out how much you grow, how much storage you have, when you need the money, and we help you execute that plan. That's been very popular for the growers that are looking, 2,000 acres or more, usually are the people that are very interested in this program. Go ahead. We have our winter class. You can call our number toll free in Wayzata. It's a 3-year academy, introductory, intermediate, advanced. We've had tremendous results with that. Call that number if you would like to register. Go ahead. So that's it. Please call us. And Cory, give us your 800 number if they want to call you directly.
Yep, it is 888-751-2256.
Okay. That's our number.
Just maybe a pause just before we get some questions. So I think they got 1 or 2 slides left. If you want to text in your questions to number on your screen, so 204-403-8444. So 204-403-8444. We'll get them and we can ask them to Al and Cory, or you can use the chat page. I do have a question that has come in, but we'll let you finish off and then we'll get to all the questions.
Okay, thank you. Yeah, if you want to get a free trial to our market pack, you can go to KluisCommodities.com. We have one, I think Krista is in our office today. I'll call her 888-345-2855. And Tyler and Travis, just let you know we really enjoy working with you guys. And as far as running a good operation where you're working on the profitability of your farmers, the fact that you're willing to work with us and provide this subscription to our service, I think, speaks highly of the type of organization you run. So thanks. It's been great working with you. And I think we're ready for some questions so that anybody that's kind of antsy to get to the field can get to the field. I'm in Wayzata. I'm about, if you ever watch the Minnesota Twins play, I'm about 10 miles straight west of downtown Minneapolis. Cory is another 200 miles west in Willow Lake, South Dakota. We have an office in Platteville, Wisconsin, Watertown, South Dakota. So we are anxious to work with you and would welcome any questions or comments that you have. Tyler, or from the group, go ahead.
Yeah, so one question came in here, it could be for Al or Cory, is so back in 2003, 2004, when the ethanol mandate started coming in, that really drove the price of corn over $3. The question is, are we at jeopardy of losing ethanol given where oil prices are today?
Good question. Yeah, I was, I was in the beginning stages of building those ethanol plants. It's really started in 2004 and came in 2005. Initially, the big boost in the Western Corn Belt was on our basis level. We're not going to see ethanol totally disappear. We might see 40 or 50% of it slow down or not produced for a year or so. I don't think crude oil is going to stay below $20 a barrel forever. But the flip side is I'd be surprised if we were ever above $60 for any extended period of time. So we're going to be talking about a new normal in a lot of these markets. And to me, that kind of wipes out the chance in the future, unless you have an extreme worldwide drought of $5 corn. I think we've kind of priced in the worst case scenario right now, with ethanol production being cut in half, with nearby corn futures trading at $3. And I think in our extended new crop pricing models, we always had been saying we would like to start at 420. I think now, more realistically, when we look out, we're going to have to be looking at 380 or 390, because with a cutback of 30%, 40% on ethanol production, cutback of producing crude oil in the Bakken going forward, it's going to affect corn prices. And I don't think we can rebuild livestock fast enough in the U.S., Canada, and around the world to offset what we're going to lose to ethanol. So I don't want to be real negative in here when prices are low, but I also have to be realistic that I don't think ethanol production is going to go back to the level that we saw in 2019 for a long, long time.
Thank you. One more question. Can you update the situation on the swine flu in China? Are we getting demand back to where it was, or is it still a long ways off?
The total cut in hog numbers from where we were a year ago in April is now about 30%. At one time, their herd had been decimated to less than half of what it was the previous year. So month by month, they are rebuilding it. We are exporting a lot more pork to China, but their demand for corn and soybean meal has been less, simply because they have fewer hog numbers. Not as much as you would expect. 30% less hog does not mean 30% less feed demand, because they're feeding the hogs to an extremely heavy weight. And so they're using more corn for each hog, and also they're having record broiler and egg production and record fish production. So the total cutback in demand for corn and bean meal is guesstimated at about 15, 18%. China, a very smart long-term trader and buyer. I mean, we've been trading futures here in the U.S. for just over 100 years. They've been trading futures in China for 2,000 years, just to put that into perspective. So what they're doing with the current low price of pork, corn, soy, sorghum, wheat, they are stockpiling their government-owned reserves. And so they're very thinking that, somewhere down the road, we're going to have a weather problem again in the world, and they are having to import a lot of their food. So they're buying hand over fist corn, beans, pork. The only problem is right now with the Brazilian real, as low as it is, they're buying a lot of those supplies from South America.
Okay. One other question here, Cory. You mentioned the weather problems and La Nina. Is that what we can hope for in weather? Is a drought? Is that what we're hoping for somewhere else?
Well, yeah. I mean, unfortunately, I mean that's what's going to take. It's going to have to take to really rebound these prices, significantly, is some type of a drought. Okay. Unfortunately, like right now, it's been on a drier cycle, which is ideally what we need here in the States, and we're getting the crop planted under really good conditions. The big question is with the genetics and stuff that we've got, and how we can spoon feed the fertilizer and all the technology we got nowadays. It's getting harder and harder to have a crop disaster, if I say it. So yeah, I mean, for a big rebound in prices, it's going to have to take a significant drought. And again, we have to produce, and I didn't mention this, but you're going to have to put 30-40% of the crop in jeopardy. We can't just have one state or a small region have a drought and situation. You typically have to have, whether it's U.S. or South America, you usually have to affect about 30-40% of the crop before the market really notices. So, but I mean, right now they are looking warm and dry. The big question I see, if that does, if it does develop, is where will we be at as far as the pollination? We're getting it planted early, we're going to pollinate early. So if the hot dry sets up after pollination, it won't have as much of effect, but if it's right during pollination, it could have a significant effect on our crop size.
Yeah, if the hot weather develops, as we've seen some of the extended models, Tyler, it would have more of an impact on soybean yield than corn yield. And when Cory went through those numbers on acreage and yield and ending stocks, the price potential for soybeans is much better than either wheat or corn. So I see so many people in the Western Corn Belt and Canada that are changing the rotation to less soybeans. Boy, in 2020, that would not be the right move.
Interesting. Okay. I got one last question, and then we might be done for the day. Any perspective on the U.S. CAD? The dollar. In Canada, of course, the soybean charts. We always like it when we convert it to Canadian dollars. Do you have any comments on the U.S. CAD relationship?
I think the U.S. dollar in right now in a period of great economic uncertainty because of the coronavirus is going to be the king. We're saying we're going to take our interest rates to zero, keep them at zero. I wouldn't be surprised if we have an ongoing recession and shrinking GDP that we could do like Europe and go to negative interest rates. But the dollar is, I think, is unfortunately for U.S. producers going to stay very strong. And I think the Canadian dollar is going to stay weak relative to it. So I think we just have to look at where it is and see what's going on. So I think that from a currency standpoint, we're really going to see the value of the Canadian dollar stay under pressure.
Okay. Cool.
That's the only people I know can get have the hope of $10 beans next year is when I see its area code 204, Tyler.
Well, we're hoping it's 10 and 11.
10 and 11 Canadian dollars would be good for us. If we could get back to 950, I think Cory and I would both agree, man, we're just gonna make our life a lot better.
Yep.
And we're gonna have to do this on a weekly basis. By the way, you said to sign off for the day, sign off for the year. No, we're talking to Tyler. We got beans up 15. We've taken out the previous 3-day highs. This is a good day, and corn's up 8. So let's plan on this every Thursday going forward, Tyler.
Okay. Well, if we need to, we can put one in for next week
okay.
to get a little pump. But thank you once again to both Al and Cory. For providing some insight into the market. They gave some contact information, and like I said, if you do buy 400 units of soybeans, you can get their information for free provided by NorthStar Genetics. So as you're looking at your rotation, so maybe there's a few beans to bump in on that. So thank you again for you guys, and once again from NorthStar, thank you for everyone for attending, and thank you for your business. And we'll see if we put one on next week if we need a rally in the markets. But if not, this is our final segment. Thanks for joining, and have a safe spring, everyone.